Welcome to DBS's Insights for Business Leaders. This is the first of a series of videos by DBS focused on supporting your supply chains in Asia. In this series, we will be discussing current situational insights and strategic actions to revitalize and mitigate the constraints on supply chains amidst the unprecedented social, economic, and financial upheaval caused by COVID-19. My name is Terence, and I'm responsible for DBS's Western MNC business, working with clients across many industries to unlock supply chain challenges within Asia, as well as between Asia and the West. I have with me today Sriram Muthukrishnan, Group Head of Trade Product Management of our DBS Global Transaction Services business. He is the Chief Architect of DBS's Trade Solutions for our corporate client base. As we enter the new decade, businesses in Asia across the globe are facing significant uncertainty with the COVID-19 pandemic. Companies are contending with increased volatility in interest rates and oil prices, while navigating the demands and dependencies of an interconnected global economy. Three challenges we see in particular. Number one, all production centers in Asia having been under labor workforce restrictions and face logistical bottlenecks. Number two, global and domestic end markets have seen deep demand curtailment, forcing cancelled orders, late payment, and prolonged factory shutdowns. Number three, liquidity buffers that were already lower following the 2019 trade war are weak, particularly amongst SMEs. So today, we examine what are the key enablers and strategies that can be applied to revive and sustain supply chains in Asia through the COVID-19 era. Sriram, let's start by sharing with our viewers, what are you seeing in the overall trade environment? How much does this pose a threat to the sustainability of supply chains within critical production markets in Asia?
The global trade outlook does look rather grim at this point. The World Trade Organization noted that 2020 would see the worst collapse in international trade since the Great Depression, with a fall between 13 to 32%, depending on how fast the world recovers from the COVID-19 situation. This compares with a 12.5% drop during the global financial crisis of 2009, which we thought was very severe. Some industries have been impacted more than others. Aviation, travel, hospitality come to mind. Brick and mortar retail has been shut down. Automotive, construction, and logistics sectors have been severely impacted by measures such as circuit breakers and lockdowns in different markets. China has resumed operations after the lockdown, and manufacturing has returned to around 70% of their production capacity. But the outlook for exports remains grim amidst a cancellation of orders and a steep demand drop from Europe, US, etc. Some businesses have invoked or attempted to invoke force majeure on their underlying contracts. Some businesses are also seeking to retain possession of unpaid goods. So all of this is severely going to impact the cash flows and in fact the financial viability of many businesses. During times of financial stress, we usually see the SME sector being impacted the most. Larger corporates have reserves. Many of them have drawn down on their revolvers at the first sign of trouble. But smaller SMEs don't have access to similar resources. The wider business and banking community needs to collaborate to ensure these SMEs, which are vital cogs in their supply chain, are supported in order to get through this period of stress.
So apart from the SME liquidity crunch, what are the other problem areas that clients are looking to solve at this very moment?
This COVID situation has brought to the front many new kinds of problems. A very big problem is one of disruption in timely movement of goods, as well as even basic courier services. Trade is extremely paper-based, so it is facing both problems. There are disruptions to logistics flows, resulting in goods stranded at ports. Title of goods cannot be transferred due to the delay in arrival of trade documents. Courier services have been disrupted, meaning that trade documents sometimes cannot be dispatched between buyers and sellers. So that's one. Another one is, a different kind of a problem. Learning from past crises, many governments have rushed to deploy relief packages, and corporates are aware of these. However, they need help to navigate through the various criteria for eligibility for grants, relief, declarations, and approvals. And often banks are the conduit through which they can access these relief packages. So banks need to really enable their clients to access such relief efficiently. DBS is accelerating the pace of disbursement of loans under such schemes. So this will be critical too.
Now that you've identified the challenges, let's turn to some of the key enablers. What are you seeing being applied for liquidity and these workflow constraints such as trade confirmations and physical sign-offs? Can you elaborate on how this can be applied to tackle these constraints?
Clearly the answer lies in going digital and in using data to deploy liquidity into supply chains. And actually these two themes come together quite nicely. First, let's talk about the digital piece. One of the big changes that I see as a result of the global response to COVID is actually what I call the digital physical reset. As wider sections of the global population have become more comfortable with getting their jobs done digitally, from ordering meals to groceries to clothes to electronics, these digital services are not new, but they've received an added fillip in the current situation because there is no physical alternative. Similarly, digital banking. In the past, clients and banks have been more sanguine about going entirely digital, especially in the trade space. Yes, clients do sign up for digital tools like online banking and host-to-host and so on, but partly because of entrenched practices, partly because of inertia, there are always the backstop of using courier or fax machines. This has changed dramatically. With clients' staff working from homes, they don't always have access to printers and fax machines. And definitely courier services have come to a stop in many jurisdictions. So this has caused people to take a relook at it. And the second enabler, which I talked about, data and supply chain financing, is linked to this. We can actually use the current data of supplier financing to quickly make credit decisions and onboard them for financing programs fully digitally. So hence, with this physical digital reset or the digital physical reset, clients can solve the problems like how we've done for a particular client for Haier, the Haier Group in China, which is a leading consumer electronics and home appliances manufacturer in China. So what we were able to do was we were able to provide a distributor financing program for them digitally. The deployment to distributors can happen within 24 hours. We take data from Haier directly through APIs. We don't collect any financials from any of their distributors. So that is a conventional, that would have been the conventional way. Now we don't do that. We do digital KYC. There is no physical branch visit. In this, the Chinese regulator also helped by making regulations suitable for this. And all this, from the time we started the discussions with Haier Group till the time we actually onboarded the first round of distributors, was under 3 weeks. So speed to market and providing liquidity in a very short time was the key objective in this current stress situation. And I'm glad that we were able to do this. So in the same theme, DBS also has launched recently something called Digi Onboarding, whereby suppliers to large anchor buyers can self-onboard with DBS for programmatic lending to a digital portal. Anchor buyers are also able to provide information in bulk about a number of their suppliers if they have it. And with this, we are able to use digital means to onboard suppliers onto programs within 30 to 60 minutes. Contrast that with what used to happen in the past, where we used to take up to 4 weeks. The interest in such capabilities is now growing quite exponentially, and many anchor buyers are coming to us and saying, can you help our supply chain? So in tackling the cash flow challenges that SME face, either in procuring or selling to large corporates, these liquidity solutions can really be very helpful. And you might wonder, what about the digital, the documents, right, for trade? It's a very document-heavy business. We've recently launched something called DigiDocs. With DigiDocs, all transactional supporting documentation or data can be uploaded onto DBS's online platform. There is no need for faxes and couriers and printed booklets. In view of the COVID situation, where our suppliers do not have access to these basic facilities, this DigiDoc service has proven invaluable, and many of our customers have been asking to be onboarded to this service as well. So these are some of the ways that people can look at taking the benefit of digital. We have a few examples where we actually also used digital means and as well as the DBS network to overcome the issue of logistics. One of the examples was a customer had effected a shipment of almost 500 metric tons of crude palm kernel oil to their buyer in India. Upon shipment, the supplier had to present export documents, which they did to their local Singaporean bank against an LC which had been issued by DBS India. But due to the lockdown in India, the export LC documents could not be delivered by that bank to the DBS India, and they approached us. So what we did was we worked with the customer as well as the Singaporean bank, the other Singaporean bank, and we were able to make sure that these bills were discounted, first of all, to make sure there's liquidity. And we also arranged for these digital documents to be shared with DBS India digitally for acceptance. So this is another example of collaborating and using some digital tools to make things happen. Finally, to help customers get access to funds from government relief packages, we are working to roll out new package products. We help the customers navigate the application and documentation process in an easy way. An example that comes to mind is the healthcare sector, which is an area of focus for us, especially in the current COVID-19 situation. So we are working to deploy financing quickly in key areas, such as accelerating payments to clinics against services provided under insurance settlements. This can normally take many months, but we're making liquidity available right now. The Singapore government released a COVID-19 package whereby the government was willing to take up to 90% of the non-payment risk for loans extended to such specialist clinics. And what DBS has done is we come up with a package solution to provide liquidity to these specialists. And we have a special task force team which is digitally guiding the customers through this process so that they can focus on what matters most, which is saving lives rather than worrying about liquidity or how they will get paid.
As we conclude this discussion, could you leave us with your thoughts, some strategies for our audience on how they can prepare their supply chains to take advantage of enablers that are available?
My first key message would be, the digital physical reset has already happened. So let's eliminate manual workflows as much as possible and make sure that the settlement journey is as efficient and seamless and digital as possible. If there are workflows within your supply chains where there is work to be done to migrate them into more digital means, by all means, please focus on that, because black swan events such as the COVID pandemic tell us that we cannot prepare enough. So the second message from me would be that suppliers in supply chains are in need of support, and they need early support. A lot of banks will talk about how we can take an invoice which has been accepted by a very large corporate and provide financing. And I think that is very good, and it's important for us to get that started and accelerated as early as possible and as widely as possible. But more importantly, I do believe that in this time of stress, even some of the suppliers who have purchase orders in hand will struggle to find the means to perform against those orders. And I think that the earlier in the chain that banks can get in and work with the corporates and provide liquidity at the time that the order itself is issued will be critical at this point of time. And I think this is what corporates and banks might need to may need to partner in order to make sure that their supply chains remain vibrant in this period of stress. And the third message would be corporates need to prepare now for the reopening of the world's economy in a post-pandemic situation. The world will recover. The WTO is projecting a V-shaped recovery. Therefore, corporates and supply chains and their partners need to think how to take advantage once the world does recover. Every country in Asia has a different capacity and speed at which its production capacity will be restored, and suppliers will need help. But if we can prepare for it now, I think the early bird will surely get the worm. So if any of these ideas resonate with you, please do reach out to us. to your DBS relationship manager, and we will be very happy to talk to you how we can work together during this period of crisis. Thank you, Terence.
Thank you, Sriram. On this note, thank you for watching this and stay tuned. See you again. Until then, stay well.